Hello everyone, welcome to the beginner's room here at XM Live, where we stream on 3 different channels, 8 hours every single day, totally for free. We are 12 to 15 experts here every single day, explaining how we trade, what is our edge in our trading strategy. And if you have, if you're trading, you need a statistical advantage. You need something that assures you that over time you make money. You never will know if you make in the next trade money or in the next 2 trades money, but you want to be sure that in the long run you make money. And you can assure that only if you have a certain edge. Now, the main problem that I see is that many beginners, they rely only on technical analysis. They only look at the chart and hope that they understand where the market will move based on the candlestick and on the price action. And in my opinion, this is a flaw. This is a problem. Why? Because in every chart, and here we are looking at US dollar, Canadian dollar in the daily chart, you can find reasons why it should go up, and you can see reasons why it should go down. And so you just change the time frames, and in one time frame you have a long, and in another time frame you have a short. And I doubt that with technical analysis alone, or let's say with price action alone, you are able to make an edge. You have a statistical advantage. Also, most of trading today is done by algorithmic trading. So don't you think that algorithmic trading understand chart patterns and understand technical charts, and they do this much faster than you do? So why should you make money and algorithmic trading? I think they're better in reading the charts. So where do I take my edge from? Not from the chart. I truly believe that if you want to have a statistical advantage, you can have this most likely from out of the chart. And so I will present you in this next session my statistical advantage, where I take my statistical advantage for. And William, I see that you are here. Javed also, good morning to you guys. If you have any questions, please don't hesitate and ask. And also those who are in social media and watching us, feel free to put in your questions in the chat, and I will try to answer that. So where do I take my data from? I take my advantage or my extra data that is not from the chart, I take from the COT report. COT stands for Commitments of Traders. Commitment of Traders, it's a sentiment indicator. Sentiment indicator is analyzing, so charts is analyzing the price. And based on price movements, try to predict where the price is going. Sentimental analysis, let's take this sentimental analysis, maybe the newest form of analysis. So let's take fundamental analysis first. In fundamental analysis, you are looking at the economic, at the real world data, and you try predict based on the real world data where the price is going. And in sentimental analysis, you are looking at the behavior of market participants and try to predict where market is going based on behavior of market participants. Okay, so in my trading strategy, I try to look at all 3 levels. I look first on the fundamental level, then on the sentimental level, and then on technical charts. But the technical charts for me in the end is just there for risk management. Now, I want to show you first, before we go into the COT report, a sentimental indicator that we have on the website of XM. So I go, and this is actually quite a cool indicator. So when you go to the website of XM, here we are having it, and you go to research and navigation and market overview, and you scroll, you have here the news and everything. So that's, by the way, the news. This is fundamental analysis. But when you scroll a little bit down, you can see here the sentiment of market participants. So you can see, for example, the majority, 89%, is short on euro dollar, and only 11% is long. So where would you position themselves? Now, those who don't know indicators, they would say, okay, if the majority is short, I go short as well. But you do this the opposite. This indicator is actually telling you, here is the thing. If you know those positions are mostly, and that's an important factor, you have to know who is making those positions. And those positions here are mostly made by retail traders. Now, retail traders, the most of them, they don't have an edge. They just come into the markets and they feel where the market is going, okay? They feel euro dollar has to fall. And so they go short. And this feeling is not an edge. So most of the time, the majority of retail traders are wrong. So if the majority is short, you probably should be long. Now, that doesn't say now you have to go long, but the general view. So let's see where we have other extreme situations. Silver, the majority is long, so maybe you should be short. Vice versa, gold, look at this. Gold, the majority is short, probably should be long, right? It's very simple, and where you have 50-50, you don't have a signal. Okay, this is sentimental analysis. I analyze how the behavior of market participants, and based on that, I make my predictions. Okay, and so William is asking if we can check copper. So it's very easy. You go here. Copper is not on the list, but you have this sentiment for every single or of most of the products. So what I do is I search copper. Copper, the short form is HG COP September. It's based on a future contract. I check here. And look at this, the majority is long, so maybe this is still a short, right? Based. Now, here what is important to say, this is only the retail traders, and it's relatively short term. It's not on 5-minute chart, but I think this sentiment is updated maybe 3 times a day, something like that, okay? Now, during the session, William, I will show copper also in the COT report. So now let's go to my sentiment. I'm looking, if I'm not sure about the product and how I should trade, I go here to the website and I check the sentiment of the retail traders. But where I look mostly is the COT report. And this is what this session is about. So again, to show you how I create my edge, how I create my statistical advantage so I can assure that long-term I make money in the market, I look at 3 levels. I look first on the fundamental level. I look how is the economy doing, currency pairs against each other. I look at the purchase power parity. We don't go into the theory of the purchase power parity today. I look at the monetary policy and where they are heading. We could see, for example, yesterday, Jerome Powell was indicating that probably the market is ready for a rate cut and so on. So I look at the big pictures and I get a general idea what could happen. I could say in general, probably the dollar is ready to get a little bit weaker. But this is long term. That doesn't say anything about today or tomorrow. By the way, look, I have created myself a small tool in Google Sheets where I can see how the currencies are doing. And I see, look, the US dollar is the strongest currency since the beginning of the week. And the weakest currency is the South African rand. Then we're Swedish, Norwegian krone, New Zealand dollar, Mexican peso, but the US dollar is the strongest. So again, my fundamental view is the Fed might cut interest rates in September. That might create a certain weakness in the US dollar, but that is a long-term view, and in short term, the US dollar is the king. Okay? By the way, I can here check the time frame, so I can see just today what is happening. And look, today, where is the US dollar? Still quite strong. We have the South African and Swiss franc a little bit stronger. And but again, this is a tool, and that doesn't have to do anything with the COT report. But I wanted to show you, to go back to the presentation, I wanted to show you the fundamental view is a long-term view. It doesn't have to do anything what happens today. Good morning, Nando. After I have the fundamental view, I go to the COT report. Again, this report that we will look at it a little bit deeper now, which is a sentimental indicator. This is the main signal for me. So if in the COT report, that's the main signal, for me, that gives me the direction. So let's say I see US dollar going down here, and I see, let's say, US dollar going down here as well. I know I will only short the US dollar. For example, that's not what I'm going to do. I just take it as an example. If I see fundamental, the big picture is short in US dollar, and I see sentimental is short for the US dollar, that's the only direction I look at in the chart. So even if the chart, if US dollar is going up, I'm not taking any trade. I'm not going against my main signal. The main signal is the COT report, commitment of traders. And only when I have, now I go into the technical chart, I look at the price, and only now I'm looking for a short entry based on technical analysis. But I'm not like clueless, you understand? If you look only in the technical chart, often you're clueless because it could go up, it could go down. It depends in which time frame you're looking. But I know I have a bias. I like a bias. I know I only want to go one direction in this market. And this helps me tremendously by making money. So let's look now what the COT report is. The COT report is a report that is published once a week, normally on Friday evening, by the US government, by the CFTC. It's Commodity Futures Trading Commission. They publish it Friday evening after the market closes. Okay? And COT stands for Commitment of Traders. That's the short form for commitment of traders. What does mean commitment of the traders? How are the traders committed to the markets? Are they long? Are they short? Okay, and we see it in this report. The report is downloadable for everybody for free. This report is created, why? Because in the 70s, 60s and 70s, there were big market participants and they tended to manipulate the markets. So to prevent that big market participants will manipulate the markets, they said, you know what? You are a big player. You can potentially move the markets. You have to show us how you are positioned. Okay? And not only you show us, we show it to the world. So you can't manipulate here anymore. You will show everything that you have. Okay, that's the COT report. By the way, this is for futures. It's written here. This report is based on futures, but you have something similar also for stocks. In stock, it's called 13F formula. 13F formula, their big market participants like Warren Buffett have to reveal which positions he have open also. So you have to show that he has Apple in his portfolio. And you know, sometimes you see the news, Warren Buffett is selling a certain stock, okay, or reducing a certain stock. So why do they know that? Because of the 13F report. Why do we know where professional market participants are in gold, long or short? In the COT report.